Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is Sean Rakhimov of Silver Strategies. Thank you for joining us here today, Sean.
I'm happy to be here.
Thanks. And Sean, you just got back from the Silver Summit. You're out of Vancouver, and you went down to visit David Morgan and the others at the Silver Summit. Did you learn anything new about the silver story or supply-demand fundamentals from silver while you were at the Silver Summit?
Well, it's tough to say. I think this year's Silver Summit has been has a slightly different undertone. Usually, the silver crowd is, if not exuberant, then they're very hardcore believers, and silver bugs are, as some call them, gold bugs on steroids, and gold bugs are an interesting bunch. But I think the market has been giving us a lot to think about, and all these expectations and predictions can't come soon enough that the silver is going to go to the moon and all that. But I did, for probably the first time live anyway, I heard Eric Sprott's speech on silver, and I know you've given many of them, and I listened to some of them online. So that was interesting because he has a different approach, a more corporate, business-like approach, outside of people like myself who, did it for empirical reasons around 2000. I, got into silver and been there since. But it's always a good show, and it's fun, and you can get a lot done. So anybody who hasn't been there probably should if they have interest in silver.
Okay, and do you think, based on your research, then we've had a very hard landing in China, and a lot of the world is slowing down. Essentially, the world economy is stuck in a stagflation of sorts, where the central bankers are trying to counteract the free market forces and the debt deflation by printing this massive amount of inflation, and it's going into commodity prices and food, energy, etc. How do you think this affects the supply and the demand for silver? Has anything drastically changed on either side?
Well, on the supply side, I believe the dominant theme at this time is resource nationalism, which I have been discussing for some time in different articles and interviews. The sort of epicenter for this activity right now that affects the silver market specifically is in Latin America, which happens to be a very large part of the silver market. I'm sure your listeners have seen or know about some of these developments taking place there. For instance, South American Silver had their silver project nationalized in Bolivia. Argentina has been creating all kinds of obstacles in terms of developing their natural resources, not only in silver space, but it's a good silver destination, and the silver market being fairly small, I think it has a significant impact. So on the supply side, the way I look at it, there are several large-scale projects in Latin America that are being postponed from development, and at this time kind of indefinitely. And that is going to impact the supply side down the line. We're talking roughly about 2 billion ounces of silver that is not coming to market. 2 billion ounces of silver probably would make about 2.5 years worth of annual global silver supply. On the flip side, when we talk about demand I think is very robust, and I don't think we need many discussion about that, or much discussion about that. The demand for silver bullion is very strong worldwide. It's getting stronger in Asia. Governments are endorsing, recommending, advising their citizens to buy in Asia, that specifically. And I think the demand side is going to get a boost here if I am correct in my anticipation that the metals are ready to take another run to new highs, both gold and silver, probably next year. And what that means is more people are going to be priced out of the gold market and will have to come into silver market as well. And then with respect to global economy, silver being also an industrial metal, I don't see yet much impact in terms of reduced demand for silver as an industrial metal, because silver is a technology metal, and technology is doing great. All kinds of new devices are coming to market, as well as it's a big part of the solar industry and this alternative energy industry. So whatever dampening that may take place on the demand side in other areas, traditional silver use, I think the new or newer uses will make up and more on the demand side.
Very good, and I think I completely agree with what you said there, that if there's any drop-off in industrial demand for silver, like if solar projects were canceled or anything like that, I think more investors would come in, especially the large orders, and there's just not the silver available, from what I'm hearing out of the LBMA, to fill those 5 or 10 million ounce very large orders. I think Sprott is still waiting on his PSLV order, right? He hasn't gotten all of the silver yet from it.
Normally, at least in Sprott's case, it takes several months for them to get their orders filled, and that's been sort of more or less the practice. But otherwise, I do agree that investment-grade silver is scarce, and I don't see that situation getting better, and the demand is very robust. And like I said, if the metals are going to run, more investors will be looking at silver because they're going to be priced at the gold market. That's in addition to everyone else who is just learning about silver or, would be looking at it for other reasons.
Yeah, silver and gold, I don't know if you agree with this, but silver and gold are two of the very few markets I've ever seen where when the price of them goes higher, people actually want to buy more. So when the price of these two things drops, people tend to not want to be contrarians, to not want to actually, dollar cost average in, buy more physical bullion, buy the quality mining shares, and they want to wait till the price goes up before they buy.
That is, at least I have an opinion on that. That is probably because the precious metal markets are the only markets that are driven by fear, as opposed to greed that drives all the other markets. People come into the precious metal space not mainly because they're trying to make a lot of money. They come here because they're scared and running from someplace else. And that probably gives at least some context to why this action unfolds this way. Also, gold and silver are the only assets in the financial markets that trade on the currency desk at investment banks, as opposed to the commodities desk where all the other commodities trade. And that's been like that always, or as far as I can trace it. So that's a subtle clue there that is often overlooked when people talk about silver as being an industrial metal only. In fact, I have a theory that if silver was an industrial metal only, it would probably be trading higher than it is and has in this cycle.
That's very interesting there. And how much do you think I don't know if you believe in the Gaddis theory about the manipulation and the paper price and how people don't take physical delivery of silver, but how much do you think the paper price, how many ounces of paper silver there are compared to real ounces of silver, plays in the price of silver and the volatility in the market?
I don't have specific numbers. My work is mostly with silver-related investments, particularly silver companies, and that's why I spend the bulk of my time, because the macro picture I leave to others. But, for instance, if you want to take Eric Sprott's premise, he would put forward numbers like every day in the paper market, futures market, what have you, the amount of silver traded is roughly equal to annual global demand or supply, I should say. So that would be 800 million ounces towards a billion, depending on what numbers you include or you don't. So every day, about 1 billion ounces of paper, quote unquote, silver, changes hands in the paper market. Obviously, that is not. I don't think that's a very prudent practice. There's probably going to be some problems with that at some point. I don't dwell much on the manipulation side. I'm more of a it's all priced in type of approach, so that's my approach. Besides, I think if you want to look at that, it's the biggest market in the world, the currency markets or the interest rate market is quote unquote managed. So it should be no surprise that if there is any manipulation or not, whatever the terms are, I don't dwell on it much because it's no different from anything else in my opinion.
That's a very good point. I think a lot of our markets are managed. There's a lot of buying of S&P 500 futures when it looks like on the technicals that the charts are going to crash. There's the LIBOR manipulation, which the mainstream media seems to have forgotten talking about, even though it's affecting all of us for all the interest rates we pay. And transitioning here to another topic here about gold and silver miners, let's talk about the financing here in the industry. The last 2 years basically have been very, very rough for many of the mining companies. Do you expect this to change, or do you think the financing for even producers is going to get worse compared to how things were a couple of years ago?
Well, the short answer would be yes. I expect the financing to tighten further because we are kind of in the midst of sort of financial/credit crisis that's ongoing, and it intensifies or kind of mellows down a little bit over time. But every new event sort of gives it another boost. Currently, we're in one of those tightening periods where money is very cautious, I should say. Beyond that, I think the producers will have an easier time financing because, one, they have the cash flow, and two, the total universe of both gold and silver producers market is so small, and whenever the main market gets a scare elsewhere, even even a small percentage of, say, money coming from the bond market or tech stocks or bank stocks or what have you from the main market into the precious metals, it kind of makes it flush with cash on top of whatever cash they make on their production. And obviously the metal prices have been very favorable for them to have a healthy balance sheet. When it comes to juniors, that's a different story because I think this particular cycle, how do I put it? Everybody is kind of, it's just the next level of in the cycle or a new cycle. There's a lot more companies out there, and they're more sophisticated in how they go about it. But the success ratio is roughly the same. For instance, from, say, you pick a number, I've heard numbers up to 10,000 projects. So out of every 10,000 projects that anybody looks at, one becomes a mine, and then you can drill it down. So if you look at 10,000 projects, you probably will spend money on 5,000 of them, and then you probably drill about 3,000 of them, and down the line, and one becomes a mine. So, but the other 10,000 projects are being flagged out there by a bunch of juniors, and I don't know how many of them out in, particularly in Canada and as well as in Australia. But the market is saturated with paper, that's for sure, and everybody's selling the promise. So I think they will continue to have tougher time because we're 10 years into the market, and frankly, There's been a lot of money raised, but we don't have enough or good enough success rate on that, the money having been spent, in my opinion. I think the discoveries have been hard to come by, scarce.
Yeah, and the discoveries that are there, a lot of them are marginal that need much higher silver prices to go into production, right?
Well, yes, because the sort of the low-hanging fruit, the easy to find and sort of rich deposits have been found and developed, and now you have to go to, you know, rougher areas, more remote. It costs more to explore these areas. It's more difficult, takes longer time. You have to look at more marginal projects. That's all true. And on the flip side, the costs are rising, and you can see that. No, you don't have to go far. You can see that in the metal prices or oil prices. So yes, I think the situation has been changed. At least the benchmarks should be different. And same thing in gold. I mean, we're talking on the gold side. You know, the numbers that are quoted for, quote, all-in cost for an ounce of gold production today is somewhere between $1,000 and $1,200 an ounce. When the companies report, they only report the cash cost, which means from the point they started operating the mine to the point they produce that ounce. But you know, they could have spent $100 million on exploration before that, or they could have spent $1 billion to build the mine. That cost is not in that cash cost. And in the silver space, it's very much the same story.
And the way I see the market changing is that I see the producers, the guys with the cash flow, like Keith Neumeyer at First Majestic Silver, who can just sit back because they already have a good amount of cash flow, and they can wait for those assets to go on sale, like a big panic 7 or 8 months ago when the silver price dropped a lot. And Keith just came in with cash, and he bought those quality-producing assets for Silvermex at a big discount. Is that how you see the market going forward, or do you think the juniors then are eventually going to rebound?
I think it's going to be sort of in spurts and in spots. I don't think the whole market is going to rebound, or if it's going to rebound, it's going to have one of these things that it runs up and then it comes down when their excitement wears out. Because they ultimately should be trading in what they have and not what they're looking for. So if we have a big rally in the metals or in the sector, yes, they may run up, but ultimately, you know, they raise the money, they spend it. If they didn't find anything, you know, what do you value them at? On the flip side, the producers that have cash flow, yes, I think it's wise of them to deploy that cash and acquire assets, you know, worthwhile assets that are tangible, drilled off, you know, proven, sort of, in an environment that is favorable for that, and you can get a better price. In fact, I can tell you that First Majestic was not the only one who made an acquisition. Well, First Majestic has been one of the most aggressive companies in the silver space, and they've done a tremendous job. I think they've acquired 4 different companies from their inception. I don't think anybody else that has that kind of record, at least in the silver space. But Endeavor made an acquisition. They bought a mine, Agnico Eagle, which is sort of a half silver company, or can be. It certainly started out as such. They made an acquisition, and it's a gold-silver project as well. Coeur d'Alene has been employing a different strategy. They have been sort of taking up to like 10% stake in various junior companies with a view that if those junior companies are successful, then that's been their sort of growth strategy. And then Hecla just started on that path. They made a similar move when they invested in a Canadian junior exploration company, Dolly Varden. And then, of course, the other big boys, in this, of course, the Pan American went all out and bought the company half their size when they took out the first mine finders. But even the big boys like Silver Wheaton, they did a big deal, but that deal is in Peru. And Franco-Nevada, which is a gold royalty company, in their latest deal, if you pay attention, they also bought the silver stream in addition to gold. I think they did a deal with Inmet in Panama. So I think the guys or the companies that have the wherewithal to do it have been fairly active, and especially in the silver space, it's so small that it's sort of hard to see any other major moves short term. I think some of these guys need to digest what they did, and others need to kind of catch up or, advance their plans or strategy to get on board with some of these acquisitions.
Now, the GDX on the long-term charts, it looks like it's put in a very solid bottom here. Do you think we're going to go sideways for another couple of months and then maybe break out, and you think the gold and silver mining stocks will outperform the bullion increases in paper terms over the next 12 to 18 months?
The short answer would be yes. I do think that on the next leg up for the metals, I think their producers will outperform the bullion. So that goes to GDX. Again, probably not the same for smaller companies because you have to be a lot more discerning. You can't group them all together because they run the gamut from moose pasture to just got a drill hole that, hit something. And then there are others that are sitting on large deposits but would require large capex and things like that. But ultimately, yes, I do expect that both gold and silver will probably get to new highs in the next, say, 18 months.
Very good. And you cover a lot of companies at Silver Strategies. You cover a whole gamut of different size companies. What are some junior producers or mid-tier producers that you have on your watch list that you think our listeners should maybe take a look at and do some more research on, and not necessarily buy, but at least start doing some research on?
Well, that's kind of sort of puts me on the spot, but before I say anything, I have to disclaim every company I will talk about, I will have a position in, because why would I tell anybody to buy it if it's not good enough for my money? Okay, and I don't give investment advice or anything like that, so buyer beware. But beyond that, one of the companies that I think is on the verge for a big revaluation is a company called Hydra Silver. They're just going into production. The company is relatively unknown. They've done a marvelous job in the last couple of years to advance a dormant project from the life cycle towards production. And it's a high-grade mine. It's in Canada. So I think they will be, say, this time next year, they will be valued on the cash flow and production rather than the way they're valued now is just another junior trying to do something. A similar story, but perhaps with greater ambitions, is a company called Santa Cruz Silver. They should be in production in the first quarter of next year as well, and that company is a Mexican-based company. And Santa Cruz is another company that I think has tremendous potential because in addition to the project they're putting in production next year, early next year, they're in construction right now. They also have a pipeline of projects. They have two other projects that are both high-quality projects, in my opinion. And then I guess we should cover the gamut here. Among larger companies, I have, publicly favored First Majestic, and the reason for that is the growth pipeline. Most other companies do not have that. For instance, in the gold space, the analogy would be, at least in my opinion, Gold Corp. Gold Corp produces roughly half the amount of gold that, say, Newmont produces or did, as recently as a year or two ago, but was trading at close to same or even greater valuation than Newmont. And in my opinion, the reason for that was because Gold Corp had and has a growth pipeline, that they have a number of projects they can bring on stream, and they're good quality projects, and that's the same situation with First Majestic. And not only they've been growing their production aggressively, but they've always been kind of looking ahead and having several projects in the wind that they can bring online if and when it makes sense. And I see that as sort of a weak spot for the sector. I don't think a lot of companies did a good job in that respect, where they have assets that they can bring online into production in short order, based on, say, market conditions or whatever their strategy is. So, and then another favorite of mine is a company called Silvercrest, and again, I own shares in the company. This company is actually somewhat different in that it is very conservative and very successful. Pretty much every project they worked on, spent any significant money, they had very good results. And the upside on this one is they have a mine in Mexico. They're working on an expansion to double the production by the end of next year. And then they also have a very large exploration project that already has about 100 million ounces of silver equivalent resource, which is 75% precious metals. And I expect that project to grow significantly, and I don't think the company is getting any value for that, which is actually quite common in the space, where producers don't get any credit for projects that are not in production. Anyway, those are the 3 or 4 or 5 companies that I like a lot right now. There are many other companies. The thing here is that it depends on what type of investor that we're talking about and what kind of situations they're looking for. So based on that, there are many different companies, and each has its own advantages and maybe disadvantages, or things that will kind of meet your purpose. For instance, if you want low risk, you do one thing. If you want aggressive growth, you do something else. If you want cash flow, you do one thing. If you want exploration, you're shooting for the moon, you have to look at something else. So it depends on the investor what they're looking for. And obviously the timing. I mean, if a company goes from 0 to 60 in 6 months, you have to revisit it and maybe reevaluate your position. Anyway, I think I said a whole lot there.
Exactly, and I think you provided very good insights for our listeners. And for full disclosure, I've owned First Majestic shares for a couple of years now. I was buying shares when it was $3 or $4 a share, and I'm still holding them. As we wrap up the interview here, Shauna, please tell our listeners more about your website and the work that you guys do over there at Silver Strategies.
Well, the idea for the website was actually one of the executives for a silver company sort of asked me way back in 2004 if I can put together a website. I have some IT background, and I have also Wall Street background, so he thought it was the space needed a venue or a site that provided sort of comprehensive information on silver. And I liked that idea, and I started the website in 2004. It's meant to be sort of a one-stop shop for anything to do with silver. and that's all we do. We don't do, other things. We like gold, we like energy, we like uranium, but not as part of this site. And then, of course, we look at the macro picture and the economy or the geopolitical picture and things like that. But on the site, if anybody's interested in silver, in keeping track of the market or the news or their sentiments or success, say on drilling success, acquisitions, all that, you should be able to find all of that on the website.
Great. And is all the information free, or do you guys have a subscriber newsletter or something like that?
No, this website is free to the public. It is sponsored by silver mining companies to a large extent. On the flip side, the terms that these companies can sponsor them are all the same for all companies. We play no favorites, and we don't allow any bias, at least with what the website presents. I mean, I personally may like one company or another at any given point better than, say, the rest of the group, but that's also changing all the time because, companies make progress, things change. So the website is free. I do work with other sort of peers or colleagues in the industry, and I have a good relationship with many of them, and they often we collaborate on, we'll compare notes on different companies, and since my specialty is silver, that's kind of what I bring to the conversation. I would recommend, if they want a subscription-based service, the guys I work with a lot, at least lately, guys at Metal Augment they're good analysts, and they're young, and they're very hard workers, and I think they provide a good service to people.
Or they can go look at someone you also worked with in the past, Sean. They can go look at David Morgan's newsletter, the Morgan Report, which I think is also a very good price for the value that it provides.
Sure, absolutely. But I'm trying to share something that not everybody might know. Obviously, everybody knows David Morgan, or everybody who knows anything about the silver space. But
okay. Well, in wrapping up this interview, Sean, I just want to thank you very much for your time, and I think you provided our listeners with a great amount of insights about silver and the mining companies.
Thank you very much, Jason. Thanks for having me.
Yes, and hopefully we can have you back on soon for another podcast.
Okay, anytime.